It's not spent trading. You know, unless you're a local trading some of the momentum flows, some of the scalp strategies where you're doing 20, 30, 40 trades a day, maybe 50, 200 trades a day potentially, then you can have long periods of time where nothing much is setting up. Guess what? Nothing much is setting up. Just let it go. Let it be. Let it do what it wants to do, and then get ready to go again into something that's pretty good. Just wait for it to happen. Wait for it to form. Wait for it to develop, and then execute when you see a good trade setting up. And that's exactly what you should be looking for when you're trading. You should be benchmarking the good stuff. And if the good stuff sets up, you must have it because you're waiting patiently for it. You can't afford to miss it when it does come in. But obviously that's up to you. Some people just are impatient. They need an outlet for that impatience, and sometimes getting some scalps done at that period is a best way to trade, just because it stops you doing silly swing trades. So have that ability to maybe change the style if you want to, or if you're a patient soul, just sit waiting for the good stuff to set up, like the top edge bonds that we tweeted out live. That was a trade that we set up at 1 o'clock, and it didn't start really selling off until 1:30. So half an hour of top line selling, and ultimately resulted in a crazy good profit. It wasn't quite $1,000, but it wasn't that far off $1,000 sell-off that we managed to get into on a live tweet. In other words, patience. Patience rewarded the sell. Patience rewarded the top line. And it took us 2 trades to get the top line sell in play for that $1,000 swing. Crazy good. But remember, that doesn't also include the fact that we did nearly $1,000 on the buy side swing from this morning as well. At 10:20, we managed to get that original buy off the bottom edge for a very, very reasonable profit. You know, maybe about $500 on that one. $1,000 on the way off the top edge, plus some loose change trades in between. You're probably about a $2,000 a contract day so far. $2,000 per day, per contract day so far in bonds, which is pretty good. You can see we have a very kind of bullish looking couple of candles here. See that? A very bullish looking couple of candles coming in there. We just unfortunately didn't sweep the low price. Unfortunately, it got very busy on the buy side, and it was the right trade to be on. But because it got very busy on the buy side, if you hadn't picked up that exhaustion at the bottom, you might well have avoided getting caught up into this massive buy surge. And that's a little bit, as I said, a little bit disappointing because it was obviously setting up a cracking buy opportunity on these little 2 candle pullbacks here. That would have been a fantastic trade. But it is what it is. You know, it got overly busy. And the best trade would have been to try and buy into the dip here because it is overly busy. Because obviously you've got to not want to join into the top edge because it's obviously an incredibly crowded top edge just now. And obviously, if they decided to sweep that, you didn't want to get you didn't want to be the guy that got the swept. You want to be the guy that's doing the sweeping, and then pick up the pieces of whoever's left straggling at the bottom edge here. So, you know, I don't like how busy it is. I think that's opening up the market for a bit of a sell. And, you know, the value looks great for it. Just not going to contain my buying at that stage. Not a chance. Not into a very, very crowded long position there. That is not for me. But likewise, you can see that the fact that this looks like a sell because of the way the order flow is stacking up, the value says that it's a buy trade. The buyers are correct. But as I said, it's just not going to contain my buy orders inside that very, very, very busy area in this kind of top line up here. So just bear that in mind when you're looking at trades. How busy is it? If it's really busy, do you really want to be the guy that's left in that trade when they try and exit? If they try and press the price back down for a sweep, do you want to be the guy trying to squeeze through that exit door with everybody else? Probably not, right? Probably not. So this is how this S&P is setting up just now. It's definitely a buy, but it's an incredibly crowded buy. So the best trade the market maker can do is to try and bring the price back down. Whether they're successful or not, it's not really the problem. Whether they're successful or not is not my concern. I'm just watching this popping a little bit here, so I think they're probably going to try and jam the price at this, and then they'll try and swing the price back off of this jam here, and that might be the opportunity to get those lower edges into the marketplace. That might be our opportunity starting to bubble here. The interesting thing is they haven't actually reversed the book into that short sell just yet. So I'm a little bit surprised they haven't done that yet. But there's certainly a lot of deltas still really quite highly priced up here at 92 quarters, 92 halves. I sold some to them at that price. I must admit, I did take some shorts against that to try and get the sweep going on the backside of this. I do have a stop in at break even without any trouble, and we're making some monies. So I did take the short. I don't know if anybody agreed with that, but I did take the short. I know it's not the right trade, guys, but it's the right order flow trade to try and get the sweep moving back to the downside, right? So I took the short into the top edge. We obviously started to see the right situation in terms of the setup. Buyers well exposed, getting absolutely nowhere. Top line established. I was quite happy to now sell into that as a bit of business, just to see if I could maybe get a stop run and then look to try and buy into these bottom edge stops. See them? Look to try and maybe buy into the bottom edge stops in line with the value that's in this for a long position. So, you know, it's a bit of both. I mean, at the moment, there's a little bit of both. I don't want to be long, even though it's the right trade. I'd rather be short from the order flow perspective, and I'd rather buy on dips once the sweep happens. I'd rather buy on the sweep dip, and that's obviously how I'm seeing this just now. It's far too busy, far too crowded at the top edge. Far preferring the short sell to try and get those busy bodies at the top edge on the wrong side of this trade, and then try and get that sweep into some paycheck liquidity below me, and then if the value still stacks up, give me an opportunity to purchase back. And you can see we were right. I mean, that was a perfect trade there, wasn't it? So we started to sell into that top line there, and obviously that worked out beautifully. And yep, life doesn't get much better than that. That was a nice, sweet bit of business.